Good afternoon, friends. I hope you guys are having a great Sunday. We will do our weekly roundup, and I hope you guys are enjoying the view from sunny Montenegro, as we have been blessed with a very, very nice and late summer. We are enjoying it. All right, let's come to the 27th and get going. So, our 200 calendar on AMD was already up 100%. Some people decided to remove it, other people decided to add another position further out the money so that they could keep this position on in the event that we got a little bit of a pullback closer to the 200 strike. But congratulations to those that took that and took their money. We have this diagonal spread on Google, which we have now changed actually to a debit diagonal. And by moving this short call back, we actually took in a massive amount of credit. Truly, what we are doing is we're freeing up the the capital that was in this long call that was looking like it was being dragged by this short position. Um, if you didn't want to do any adjustments, this position was up 65%. And here, just remember that the original debit we paid out was $685. And now we are actually, by moving that short call, we actually released about $2,000 of cash from that long position. And I will show you that here in a second. So here you can see that by moving that short position out, we have reduced its drag on the long call, and that long call now is kind of showing us what its true value is. So the true value on that long call of the 270 is now up closer to almost $4,000. Now, since we took this position, Google has continued to move up, and that long call has actually gotten deeper in the money. But this is the power of managing trades and not just being in long positions, but by having those short positions around that you can manage. Especially if you manage before the trade is in the money, then that's a lot easier to kind of shift around those shorts. Here you can see with crowd, our 510 calendar is also now in the money. Now we have managed this position multiple times and have continued to take in credit on this position. So right now the long call is kind of freed up because of the moving back of that short position to the tune of $2,600. Congratulations to those who are in and have continued to hold. Now, the other part of this is that we did decide to add, so for some of our positions, we've decided to add some put credit spreads below the calendars so that as those decay and bring in a bit extra cash, that frees up some cash for us to move those short calls out without giving up the long position. So you can see that here that on IBM, we added this bull put spread. So with Affirm, our broken wing butterfly was up 100%. I did signal to people that, especially if you're in a small account, you might want to take profits just because we did have PayPal earnings coming out and that could impact this trade. I will show you the chart and you will see that it did. So this trade, if you didn't close it on my signal, then it did end the week flat because Affirm did move down to the 72. So it was below the entire broken wing butterfly. AVGO has continued to just do really, really well for us, and is now our 370 is now in the money, and we did have to manage that short position. But again, congratulations to those who are taking the trades and are managing them alongside us. BMNR, for those that took this straddle with us, this has been just a perfect play. The amount of credit that we took in on first instance was $2,000. For those that know, when you sell to open, then usually your objective is that you want the entire position to decay in value so that you can close it for a portion of the credit that you received. So this was actually has now decayed by 50%. And so we were able to take that credit in. The reason it's showing that we are up 3,000% is because it is showing us the combined value of what we gained against the shares. And so that's kind of what it's demonstrating to us. I'm not really sure how OptionStrat gives you these kind of wild returns, but sometimes how they calculate, but it's the relationship between how many shares you have, what their gain or loss is, and then how much the straddle essentially quelled the potential loss on your position. So had you just been holding BMNR shares, you really wouldn't have made any money. You would have actually lost about $40. Well, that's actually how much we lost. We lost $40 on the shares, but we didn't close the shares. We still own the shares, and we have just changed this position a little bit in order to take advantage of where the gamma positioning was and to take in some more credit. Just because once you've kind of hit about 50-60% decay on any kind of short positions, you really do have to justify to yourself why you are still holding that trade instead of rinse and repeating it to take in a much higher credit to give you a little bit more of a buffer zone relating to the potential movement. So congratulations to those that took that. For those that were in Google, because Google had earnings, we did add a smaller short duration calendar spread, which did really well. That was up over 200% returns. And our debit diagonal for Google is in the money. So we do need to be like cognizant of that and then try as much as possible to kind of keep that short position rolling out. We do have a couple of other positions on Google, but we're just letting that long call get closer to the money. And our short position is only until December 19th, so we can continue to roll that further out. All right. We added for those that don't know, we did trade last week ISRG. Oh, looks like my trading view decided to go to sleep on us. So let's just open that back up. ISRG had a massive gap up on earnings and then was sitting on top of their earnings position, was sitting kind of on top of that earnings gap up. So just to make sure that we weren't giving back all of our returns on our upside positions, we did add a put side position to kind of take advantage of a potential pullback into that gap. But as of now, ISRG continues to digest at the top of the zone. So our long positions are continuing to do well, but this just gives us a little bit of protection. So then HIMS has been extremely disappointing. For those that were in the short straddle with us, this again demonstrates why a short straddle can be so helpful because HIMS is obviously quite down. We only bought 30 shares of HIMS because it did look like there was a potential for it to break down. And that we got those at $58 a share. So 30 shares down $10 meant that we are down $300 on the shares, but then we did average back in. The actual short straddle itself was essentially flat. It was like $5 green, $5 red, $5 green, $5 red. We just removed that and then added a short straddle closer to the current price with more duration on the trade. So this kind of demonstrates why this position does really well, because yes, in this particular instance, the short straddle didn't make us any money because we did have quite a significant move to the downside. And if you notice, the BMNR position we had to the 21st of November. So we did have more time, which meant that we took in quite a bit more credit. So that did give us a little bit wider wingspan for it to decay. With HIMS, we did sell a little bit less time. So we did end up taking in slightly less credit, which then meant that we didn't have as much downside protection on the move. But overall, the good thing is that the straddle didn't hurt us at all. It didn't drag any returns, and it did allow us to just reposition the whole trade on first instance with a lot more time on it. The Google earnings calendar that did over 250%. So congratulations to those that took the trade. We also added a Microsoft Iron Butterfly that was actually early in the week up over $200. But then, of course, on Microsoft earnings, they did have a little bit of kind of they had a little bit of a move down, not significant, but enough of a move down that the Iron Butterfly was down about $2. So we did just decide to close that. But I know that some people did close that for a $200 profit because they closed it on the positive news from Microsoft regarding OpenAI earlier in the week. So Amazon had their earnings, and we are in a bunch of positions, and those are all doing really well. You can see they all have quite a bit of duration on them. So we're not under any pressure to take those off, but it is nice to see that, sometimes you can play earnings with a bit more, with a bit of vision to it and not have to just play every earnings as if you're only trying to catch the earnings move. So with SPX, we did add a hedge because of the fact that, like we always say, never leave a good settlement naked. When you have settlements that are not tapped, for those that are going to newer to the group and will be learning how we trade, usually the S&P likes to go back to the previous day's closing price. It doesn't like to have a price gap. So if the next day on the trading day you have a gap up or a gap down, at some point during that trading day, it wants to fill that gap. And we actually had two gaps up where we never came back to the previous day's closing price. So for us, that was kind of like a shark in the water. And so we just thought, to hedge our books, let's keep the position down below us. Now, depending on what people's books looked like, how much they needed to hedge or not hedge, these positions actually went up to about $700 on Friday. And then everybody asked, do we close? And I said, well, it just depends on how much you are trying to hedge. We still had all positive gamma. So the major move should have been to the upside, which on Friday you could see that we had that really strong squeeze to the upside. So some people decided to close the hedge. Other people felt, no, my entire book is leaning so long that I want to stay in spite of the fact that I could eventually end up with a bit of a loss. IREN, that has also done really well. This is about the fourth time that we have played this combo setup where we have a put credit spread, a shorter duration put credit spread with a long call calendar. And then just as IREN kind of slowly kind of grinds up higher, we just take the position and kind of roll it up a bit, roll it up a bit, roll it up a bit, and allow that the time decay to benefit us with the long call position. And that is that. I will show you guys also my OptionStrat, if that is still open. Did that all? Yeah. So just to kind of run through the systematic trades, so you can see that these have all done really positive. The 5 p.m. is our noon butterfly. 2:30 p.m. are the trades that we open, the 0 DT settlement butterflies. And then these are the overnight butterflies, the one you see at 9 p.m. being opened. A firm, like I said, that actually was worth over 100% when I signaled the call out, but I know some people left the trade until close, so I did evaluate what that would look like if you held on longer. Again, the different butterflies returned if you held them till end of day, 650, 720. So if you wouldn't have managed that position at all, like you didn't have scalps to take, obviously it ended the trading day up, so your scalps would have all been hit. On the 30th, the two iron butterflies, the overnight iron butterfly, those would have all expired with a loss, but you can see that those positions did decay at 20% and at 44%. So those did hit all of their scalps. So these are only the data points for those that are holding runners. Here's the Microsoft Iron Butterfly at the closing of $200. The hem covered straddle that was down $33. Yes, I did also close my last runner on ASML. That was up over $2,700. The earnings calendar that we had, that was up 350%. I did earlier say 250%, 350%. And I didn't even actually catch the top because I was managing too many other trades. I did signal the group to close at 260. This actually went all the way up to $3, but by the time I closed it, which was not the best return, I only got $2.15. The other iron butterflies, the midday iron butterflies, closed at $16 and $1,200. Our crowd diagonal that closed for $450 or 120%. The AVGO call calendar at the 370, closed that for a 90% return. The APLD covered straddle, which we adjusted. That was at the 22 strike, and we've added a different one. We did close that for a 78% return, which is just about $75. But remember, APLD is only $22. So that does get you about 3-4 shares for free. Again, your SPX calendars closed end of day at $560. And at $70, not a massive return, but still it's not red. And the long put butterfly, if you would have left it until the very end of day, that would have been flat. But of course, we always tell you with your settlement, anything relating to settlement, once you start to see your returns, you have to put in your stop losses because it is very irregular that you will close near settlement. If every day you close at the previous day's close, it means your market is totally flat. That doesn't happen. You create candles with lots of movement. So there, oh, Oscar, no, that's an older trade. So there, those are like a review of the trades that we had this week. I hope you guys all made money. If you're not making money, if you're not able to close the strategies at the same way that we are closing them or signaling to close them, or the way you see people share their wins, ask us for more information. It means that there's like some gaps maybe in knowledge or how we're kind of expressing how we manage the trades. But it is true that everyone at the Trade Speakeasy does choose to manage their trades a little bit differently. Some people are religious about taking their scalps. Other people want the benefit of being able to make like choices, to be able to squeeze a little bit more out of their trade, or to feel like they're interacting with the trade. Some people do not like to just do open closing orders because they feel like they want to really grow in their knowledge of how the markets move and how the candles kind of set up and what is a good time frame for them to manage these kinds of trades. So we don't discourage that by any stretch of the imagination. We want you guys to take the systematic trades and then find a methodology that makes sense for you, makes sense for your work schedule, but doesn't decay the returns. Now, your win rate might not necessarily be the same, exactly the same as ours, because you are maybe implementing some different changes, but your returns may actually be higher. Because one of the things that I always tell people is actually the highest win rates don't actually always make the most money, because the highest returns is always closer to the end of day with iron butterflies, because then you've had a lot of decay. But if you cannot watch the trades can go very wild if you just let them do whatever without engaging with them at all. So if you know that you cannot engage with the strategy at all, then you do want to have the highest win rate, because that is going to protect you from that need to engage with and make decisions on the strategy. So then we tell you guys, take your $1 scalp, your 120, your 150, whatever you're comfortable with, and then just move on with your day without needing to implement any of the other hedgings or any kind of trade management. But all right, friends, I hope you guys are well. I hope you guys made money. I know I made money this week, so I hope you guys also made money. But all right, have a great weekend, and we'll see you in the Discord tomorrow. Bye for now.